Hello, uh, hello, and welcome to another video. Today we'll be showing you how to place stop loss using the ATR indicator. How to place stop loss for your trades using the ATR average true range indicator. Okay, so on the screen I have XAU USD 1 hour time frame, and let's say you have a trade call. You have a trade call from your VIP group or from your trade advisor, and then the call, the forecast or the signal is not telling you the stop loss for you to use. Okay, you heard someone say buy gold. Okay, and you want to place stop loss. You do not know the appropriate stop loss, or you do not know how to place the stop loss. What you can do is to place the ATR indicator on your chart, on your trading chart or your MetaTrader chart. Okay, for the desktop, this is the ATR average true range indicator. How to get it on your desktop? Of course, you can get it from the indicator list on your phone, on your mobile phone. Okay, so once you have installed the ATR, this is the ATR indicator window. Once you have installed it, okay, then on this left side for desktop, you can see the ATR value. This is the ATR value, the current value. We're talking about the current value for this candle, for the current candle, the closing candle. Okay, the current value is 6.4393 for gold on the 1 hour time frame. So you can easily use the ATR indicator to plot or to know your stop loss level for any particular time frame, for any particular asset. Is it gold? Is it Euro USD? Is it GBP USD? For any Forex pair, you can easily use the ATR indicator to find a stop loss level. All right. So I'm going to use Microsoft Excel sheet to demonstrate or to calculate the stop loss level. Okay, so if I'm going to place buy for the current candle, the current candle looks bullish, and I want to place a buy trade for this current candle. If I want to place a buy trade for this current candle, okay, I'm talking about this candle right here, this particular candle right here. So I can place my buy entry here. Let's assume the market is open and I place my buy entry, okay, at 1762.96. okay, I entered a buy trade. So how do I know my stop loss level? So what I'll do for the bullish candle, and I'm buying is a bullish candle, I look for the low price of that bullish candle. Okay, if I'm going to place the cursor on this candle, what's the low price? The low price is 1759.90. okay, so I'll go to my Microsoft Excel sheet. I can use a calculator to 1759.90. okay, let me increase the font size. Okay, okay, 1759.90. all right, so I'm going to, just a minute, now I'm going to add, I want to know, I've gotten the low, this is the low price, this is the low price for, just a minute, okay, this is the low, Okay, low price when I'm buying. Okay, I'm buying, so I'll get the low value, the low price value, price value. That's the low price value for my buy trade. Okay, buy trade, buying. Okay, that's the low price value. Then the ATR value. I'm gonna this is my ATR value. So what's the ATR value for that particular candlestick? Let's go to it. Okay, the ATR value is 6.4393. 6.4393 is the ATR value. 6.4393. Okay, so that's the ATR value. Okay, for the buy trade. So if I'm going to have if I'm going to subtract this, so for buy trade you subtract ATR from low price. Okay, all right. So if I'm going to subtract this, I'm going to have something like 1759.90 minus 6.4393. So this is where my stop loss will be. Okay, 1753.46. So if I'm going to go to the charts, my stop loss will be this. Okay, let's change the line, horizontal line, to another color for stop loss. Yellow. 17. If I go to the Excel, 1753.46. 1753.46. So that's where. So if I go to the daily time frame, so if I place a buy trade for the 1 hour, for this particular 1 hour candlestick. Okay, this the last candlestick for the day that was on Friday. So if I place a buy trade at 1762.96, I have a trade called buy gold, and I'll place a buy trade. So my stop loss will be at, oh sorry, I deleted that in error. That should be 1753.46. So if I place a buy trade at that level, my stop loss should be at 1753.46. So going to the daily time frame, you see this is where my stop loss will be. So if I buy at 1762.96 using the ATR is telling me place your stop loss at 1753.46. Okay, so I could just place it a little bit below that stop loss level with the 1753.31. That should be okay. Okay, for gold. So my take profit could be 3 times the stop loss depth. Okay, of course this is stop loss multiplied by 3. You have something like this. So 3 times of the depth of the stop loss could be your take profit. Of course, if price starts to go up, you can always use if price starts to go up, you can always use trailing stop. You can use trailing stop to follow price. That means you can set your chart, your method MT4 or MT5 as the case may be, to automate trailing stop, where the stop follows price as it goes up. Of course, that means your stop loss will be moving gradually as price goes up to follow price. Or you can manually move your stop loss. As price breaks the higher high. Okay, like you have a break of the higher high around here, so you move your stop loss below the low. Okay, as it breaks the higher high around here, you can move your stop loss below the low so that you protect the trade. But if everything goes wrong and you have a drawdown, of course you'll be stopped out at 1753.46. So that's how to use stop loss in a buying situation. Okay, what about if you are selling? If you are selling, let's go back to the 1 hour time frame. Let's go back to the 1 hour time frame. I'm going to delete all this. Okay, so let's assume you have to sell. You had a call that you should sell. Okay, let's go to the 4 hour time frame. Okay, you received an information that you should place a sell after this bearish candle around here. I'm talking about this bearish candle. You received information that you should place a sell. Okay, and the close of the bearish candle is 1808.48, and you're told to place a sell trade. Okay, so what you do is go to your Excel sheet. Okay, so to place sell trade, I'm going to edit this sell trade. You had ATR value to high price of the candle. Okay, all right, so I will edit this to read high price value and ATR value. So going back to the chart, you want to sell. Okay, want to place sell. Now the high price of this candle is 1814.66. That's the high price of the candle, 1814.66. Okay, that's the high price of the candle. Then you look for the ATR value. The ATR value for that candle. Okay, the ATR value for this candle is at 6.6464. 6.6464. So that's the ATR value. You can trace that with a horizontal line. You can see 6.67, but I at exact point is 6.6464. So that's the exact ATR value, 6.6464. So we are going to add that ATR value to 6.6464. Okay, so you're going to add that to the high price, the high value of the price. So, and that gives you 1821.31. So you can always place your stop loss above this bearish candle, 1821. So your stop loss will be around 1821. Let me get it again. 1821.31. Okay, that's a stop loss. Okay, so if you are to place a sell trade for this candle, okay, your stop loss will be here using the ATR value. Now you can now multiply the depth, okay, times 3 or times 2. If you are using a risk reward ratio of 1 to 3, multiply it by 3. Okay, that should give you somewhere around there for you to take your profit. Somewhere around there. We are looking at 3 times the depth of the number of pips. It could be around here. But if you are using 1 to ratio 2 risk reward ratio, it could be somewhere around here. So the choice is yours. But if you get a call that you should place a sell trade, and that the person that gave the analysis or the forecast did not tell you where to place stop loss, you can use the ATR indicator to plot your stop loss level. And then as price continues to go down, you can move your stop loss. If price gives you lower low, lower high, lower low, lower high, you can move your stop loss manually. Okay, you can move your stop loss manually. Okay, we are on the 4-hour time frame, but on a smaller time frame you may see something like this. Okay, on the 30 minutes, on the 15 minutes, you may see something like this. So you have a lower low here, a lower high here, a lower low here, a lower high. So as price continues to go down in line with the forecast, once price breaks this low here, you can put your stop loss, you can shift your stop loss above this level. And as price goes down, forms a low and goes up, retraces, and then breaks the low, you can place your stop loss above this lower high here. So that's just the idea about how to place your stop loss. If you get a call, place sell trade, you do not necessarily need to ask for stop loss. You can easily calculate it. Just go to your calculator or go to your Excel sheet. For buy trade, if you have to buy, you subtract this the ATR value from the price of the currency pair or the assets or the commodity. If you have to sell, you add the ATR value to the high price. For buy, you subtract ATR value from low price. For to sell, you add the ATR value to the buy price. So you can use this to trade, to set stop loss for any tradable assets. I'm talking about Euro USD or GBP USD. You just plot your ATR value and get, for that particular candle, get the ATR value and subtract or add as the case may be. So don't forget to click the subscribe button for the channel. Subscribe to the channel to see more of our videos on how to trade Forex and volatility index. Click the like button. Like the video. If you enjoyed the video, click the like button. Also click the notification button, the bell button below the video. Drop your comments, ask questions. We'll try as much as possible to respond to your question. You can also go to our website, www.binfxtrader.com and then fxfables.com to learn more on how to trade Forex and volatility index. Till I come your way next time, is bye for now.